The North American stock market resembled a roller coaster ride this past week. Driven by the unpredictable winds of trade policy, indices swung between gains and losses. Investors, caught in the crosscurrents of news from Washington and Beijing, struggled to chart a clear course. Despite the turbulence, the week ended on a cautiously optimistic note. Hints of a potential trade deal between the US and China offered a glimmer of hope. However, the underlying tensions remained, casting a long shadow over the markets. The question on everyone's mind is whether this fragile optimism can hold. Will the trade war escalate, dragging down the global economy? Or can a deal be reached, restoring confidence and fueling a sustained rally? The answers to these questions will likely determine the direction of the market in the coming weeks. The week began with a hangover from the previous week's trade-related turmoil. On Monday, April 21st, markets exhibited volatility as investors reacted to mixed signals from the White House on potential trade deals. This uncertainty continued into Tuesday, leading to another day of choppy trading. Wednesday brought a glimmer of hope. News that President Trump was reconsidering his stance on tariffs sparked a relief rally. The Dow Jones Industrial Average, the S&P 500, and the tech-heavy Nasdaq all closed the day with solid gains. This positive momentum carried into Thursday, with the markets continuing their upward climb. The rally was fueled by further hints of a potential trade deal and the possibility of reduced tariffs on Chinese goods. Friday saw a more muted close as investors paused to assess the situation. While the major indices all ended the day in positive territory, the gains were modest. The threat of a trade war still loomed large, tempering any exuberance. Despite the late-week rally, uncertainty continues to cloud the outlook for the North American stock market. Trade policy remains the dominant factor driving market sentiment. President Trump's recent statements suggest that a deal with China could be within reach. However, the details of such a deal remain unclear. Furthermore, even if an agreement is reached, it is likely to be just the first step in a long and complex process. The ongoing trade dispute has already had a significant impact on the global economy. Businesses have delayed investments and consumer confidence has taken a hit. If the trade war escalates, it could trigger a global recession. In addition to trade, investors are also keeping a close eye on other economic indicators. The recent decline in 10-year Treasury yields suggests that investors are seeking safety in government bonds. This could be a sign of growing concern about the health of the economy. The coming weeks are likely to be volatile as investors react to news on trade and other economic developments. Buckle up, it's going to be a bumpy ride. The recent turbulence in the stock market is a stark reminder of the risks inherent in investing. While the potential for returns is always enticing, it is essential to approach the market with a healthy dose of caution. Past performance is not necessarily indicative of future results. The market can be unpredictable, and even seasoned investors can get caught off guard. It is crucial to have a well-diversified portfolio and a long-term investment horizon. Before making any investment decisions, it is always advisable to consult with a qualified financial advisor. A financial advisor can help you develop a personalized investment plan that aligns with your financial goals and risk tolerance. The information provided in this video is for general knowledge and informational purposes only and does not constitute professional financial advice. Investing involves risk of loss, and it is essential to conduct thorough research and seek advice from a qualified professional before making any investment decisions. Remember, your investment decisions are your responsibility.